A very warm welcome to you, Alistair. I do want us to jump right into it and start with just speaking about how much has changed in terms of what we have available to us in terms of technology and how that could be impacting the financial services industry, and I would imagine negatively or positively.
Yeah, I guess your view as to whether it's negative or positive depends on your outlook. If we look at it from the customer point of view, then there's a whole swathe of technologies, not all of them related to financial services, that are influencing the way they want to consume financial services, the way they want those financial services delivered to them. Equally, there's technologies on the bank side, though, that can affect the way those banks deliver the technology. So I guess it depends on which angle you're actually looking at it from.
And just so far from what you're seeing, and I would imagine, I mean, you're here in South Africa, but I mean, I would imagine that you do have experience outside of the country as well. Just speak to us a little bit about how consumers and what consumers are demanding. I mean, just in terms of what they're able to get on other platforms and what they might be expecting to get from their financial services when it comes to technology.
First thing I'd say is, in terms of the South African market, it's highly sophisticated anyway, and certainly we have a lot of clients looking at the market here to try and learn lessons. So that's the first thing to say. I think in terms of consumers, they're looking for personalisation, which they're able to achieve, whether it's through web applications or increasingly through mobile applications. They have much greater transparency on what they buy, the quality of the service, the pricing associated with that. They have a much greater ability to get the views of their peer group, whether it's the social peers or professional peers, on what they're about to spend their money on. And how much? So it's much more about transparency and the ability for those consumers to get a third-party view on a transaction before they actually undertake it.
And Alistair, I was about to ask you about that, about having this connected world now, where it's easy to speak to people, speak to your peers, just as you've mentioned, and just in terms of how financial services would respond to that. Because on one hand, if you're doing a good job, it's probably a good thing, but on the other hand, if you're not, and you're probably not meeting up to expectations, it might not be such a fantastic thing that people can speak to each other really, really quickly.
Well, within the equation, there's two sides to it, and you've highlighted the positive side, which is you can use this connected world to get the message out there when you've got a good product, a good service, or when your customers see you delivering a good product or service into the market. And there's plenty of institutions out there using social media to get that message out there, and to try and ensure that as wide a number of customers understand that the positives that institution can bring. However, the danger comes when the other side of the equation kicks in and you don't get it right. And unfortunately, there's any number of banks out there who've been bitten by that. They've used social media to acquire customers, and then when things have gone wrong, those customers have turned the tables on them and used social media to explain to their peer group why this particular institution hasn't actually satisfied the commitments they had made initially.
Alistair, one of the things you talk about is strategic marketing, and that is something that any organization has to have. But how much more does it become probably more complex when you're talking about all these platforms that you have now, where you're talking about, clients want that personalized feel when they're interacting with their service?
Look, it was difficult enough beforehand to anticipate what your clients were going to do. That's when we had the static world, when you could look at past behaviour and extrapolate that forward, and at least have an assumption as to how customers might react. But now we've got complexity around physical location. So the physical location a customer's in can alter the way they interact with a bank. That the technology they have available to them can affect the way they interact with the bank, and the context for that transaction. That could be what day of the month it is, whether they have sufficient funds available. It could be whether they're out with a group of friends. There's a whole host of contextual issues. So I'm afraid that the message is, from a bank point of view, it's an incredibly complex situation to manage. That offers opportunities, though, as well as downsides. It's not all downside for the bank.
For you, which are the banks you think are going to do well, or already have proved to be riding this technology wave quite well?
Look, I'd steer clear of naming individual banks, purely because you can argue one way or another whether a bank is, they might have an application out there that's potentially very successful, but whether it's driving revenue or not for the bank is a moot point. So avoiding naming individual banks, what I would say is the banks that are successful in this space are the ones that have a direct line of sight to their customers. So they recognise the technology their customers are using. They have a direct line of sight to profitability. They understand which customers are driving profitability and how they can drive additional value for those customers. And those banks that actually understand the full implication of what they're doing. So if you're getting into social media, it's not a marketing exercise. It needs to be something that you immerse the entire bank into. This isn't dip your toe in the water. You have to leap in fully clothed.
Alistair, what are you seeing more of? Are you seeing, and I'm not just talking about South Africa here, I'm talking about the countries that you've had experience in. Are you seeing more of banks riding the wave of technology that already exists, or banks now becoming more and more innovative to say, well, this is the kind of technology they can come up with that would make their clients' user experience much more friendly and much more lucrative for them?
You know, it's a real mix. You have some of the traditional banks who are much more focused maybe internally on the supply side, what they can deliver into the market, and using technology to enhance that. Equally, you have a range of new banks, most of them relatively small, but still they're small at the moment. They have potential to grow, that really are socially orientated or have integrated new payment technologies right into their core propositions. So it's no single market out there. You've got a multiplicity of solutions. And to be fair, that's the way it should be, because we talk about customers as a generic customer. There's plenty of customers out there who still want the traditional branch with the traditional banking services. Equally, there's an increasing number of customers who never go anywhere near a branch, but want their bank to provide increasingly sophisticated products through their mobile device or through their tablet computer.
Thank you.
So I think we're actually getting to a stage where the market is supplying what customers are needing.
Thank you so much, Alistair. That was Alistair Newton, Research Vice President in the Banking and Investment Services Client Vertical at technology research and advisory company Gartner.